Welcome to the virtual real estate seminars by me, Mina Badros. I am a licensed real estate instructor and a licensed realtor. I own a brand, Real Estate Made Simple. We make real estate simple for people and help people accomplish their real estate goals with ease. We're really focused on education and providing real estate education to people so that people are knowledgeable and empowered as they buy, sell, or invest in real estate. We also handle the transactions itself, so as far as buying and selling, and we are brokered by EXP Realty to handle those transactions. So that is as much introduction and information that I'm going to talk about myself. We're going to go ahead and dive right into this webinar. So today we're discussing the home buying process. We're going to talk about the process, and I'm also going to go over some tips and savings for you so that you can save some money as you purchase your home. What we're going to cover today, one is the home buying process, and we're going to go through step by step of the home buying process. Second, we're going to talk about how to best position yourself to buy a home in today's market. And third, we're going to discuss some of the best loan programs and strategies to save you money as you buy your home. Few things to note. There's a lot of small details throughout the home buying process. We're going to cover a lot today, and I'm going to give you some great information, but we're not going to get to everything, obviously. So we're not going to cover every little detail, but I will give you a great overview and some great information to keep in mind as you move forward. Second thing to note is that everyone's situation is different. So you might be in a different financial situation than someone else who is also attending this webinar. Everyone has a different financial situation. Everyone has a different goals, short-term goals and long-term goals when it comes to their finances and their real estate acquisitions. Also, everyone has different needs and wants. So what's best for you really depends on your situation, and it's not a one solution fits all. What's really best for you really depends on your situation and what you're looking for. So I'm going to give you a lot of great generic information on this webinar, where I would suggest that you schedule a call with me to discuss your specific situation after this event. And I'll give you a link where you can schedule a call with me a little later. So let's dive into it. What is it that you need to buy a home? To put it in the very simplest way, just think of if you're buying anything else. So if you were to go on Amazon, for example, and buy a product, whether it's a phone or anything else, what you need is the money, right? You need to have money in the bank, or you need to have the money available to buy that product, and you need to find the product that you want to buy. Very similar to home buying. The two major things you need, one is the financing, and second is finding the home, or the two F's. So the financing and finding the home. You need to have the money to buy the home or be able to get a loan allowing you to purchase that home. And then you need to find the right home that works for you and your family. Okay. So as far as financing, most people buy a home using a home mortgage, which is basically a loan. Some people buy a home using cash or a line of credit. For the sake of this presentation, we'll walk through the process as if you are getting a mortgage. So a lot of our talk is going to be about purchasing a home using a home mortgage. So what are the steps of the home buying process? As you can see on the chart here, and I'll explain it a little bit. The very first thing you want to do is meet with a real estate professional like myself. And pretty much once you do that, the rest I will walk you through. So you just meet with me, schedule a call with me, and the rest I will walk you through. But for the sake of the webinar, I'll actually walk you through the process right now. So first thing you will do is schedule a call with me, meet with me or another real estate professional. We will discuss what it is that you're looking for in the home. We will also briefly discuss your financial situation so that we can see maybe the best types of loans for you or the best financing route for you. I will then send you a few lenders that I've worked with in the past. You're also more than welcome to use your own lender, whether it's a bank that you currently do business with or a local credit union or whatever it is. But the idea is, we'll talk about what you're looking for, your financial situation, and then you move into the next step, which is getting pre-approved, or basically having your finances in order. Once you are pre-approved or have a pre-approval letter, we'll talk a little bit about pre-approval over the next few slides. Once you are pre-approved, then you're ready to shop for homes and make offers. So basically you will search for homes, and I can help you do that as well. We will see homes in person, and I can schedule those for you. And hopefully we will find the right home sooner rather than later. Once you found the right home, what you're going to do is make an offer, and your real estate agent or myself will walk you through that and get all the documents ready in order to make an offer. After you submit an offer, there's usually a negotiation period where you go back and forth with the seller and negotiate the price and other terms of the purchase. So once you negotiate, you will finalize the contract terms. You will revise the contract based on what's negotiated and mutually accepted, and the contract will go around for signatures. Once you, the buyer, and the seller sign the agreement or sign that offer, it becomes a legally binding contract, and then you are now what's called under contract. Some people call it in escrow. So once you get a property under contract, there is then a process. I have it here as step 6, which is contract to close. So what happens between the moment you get a property under contract until you go to closing? There's a few things that happen there, like submitting a deposit, getting an inspection done, having an appraisal, getting title work, and basically meeting all the terms and contingencies that are outlined in the contract. And again, your real estate agent or myself will walk you through those step by step, and will make sure that you are taking each step accordingly. And once you go through the entire process, you will then go to closing or settlement. So usually the contract to close process takes anywhere from 30 to 60 days. So basically from the time that you find the home and you negotiate a deal and you sign an offer with the seller, from that moment, it could be 30 to 60 days before you actually take possession of the home. And it's not a done deal until you close on the home and until you go to the settlement table and sign a whole bunch of papers. Then you will get the keys, and congratulations, you are then the official homeowner of that home. So really quick, I'll summarize it again. Basically, in a nutshell, you'll talk to me and I will get you set up. Then you will get pre-approved through a lender or getting your finances in order. And then we'll go see homes. And once we find the right home, we'll submit an offer, and I walk you through the rest of the process step by step. And I make sure every deadline is being met and everything is being done. Some people go look for homes prior to getting pre-approved and prior to talking with a mortgage lender. But here is why it's very important to get pre-approved before seeing homes. Getting pre-approved allows you to see where you stand financially in relations to buying a home. It tells you what price of a home you can buy and the amount that you qualify for. So, and it also shows you how much you would be paying on a monthly basis. So overall, it tells you, what price you qualify for, what are you going to be looking to pay on a monthly basis, and that will help you determine the price range that you're comfortable with shopping within. Some people, basically go to their max and buy a home wherever their maximum loan amount will be or their maximum qualification would be. And some people choose not to go to their max just so they have some buffer there and they're not overwhelmed on a monthly basis. And the very most important thing is that a pre-approval document or a pre-approval letter is going to be needed to make an offer. Right now, the market is moving so fast that good homes are not lasting very long at all. So once you find and see a home that you like and you think it is the right home for you, what you want to do is have all your documents ready. So you want to have your pre-approval document ready. That way you can submit an offer right away and don't have any more delays. Next, we're going to talk about what mortgage lenders are looking for. I think a lot of people have misunderstandings of what it needs to qualify to purchase a home. A lot of people think that they don't qualify. So I'm going to debunk some of those myths right now. So what do mortgage lenders look at? The very first thing they look at, or one of the most important things they look at, is called your DTI, or debt to income ratio, which basically means how much debt you pay on a monthly basis divided by how much income you make on a monthly basis. So they look at what debt you have going out each month and what income you have coming in each month. And your debt includes things like a current mortgage if you currently have a home. It includes car notes or car payments that you're making. It includes student loans and also credit card debt, as well as maybe any medical bills or any other debt that you have. It doesn't include utility bills. It doesn't include phone bills. It doesn't include your food shopping or any of that. It just includes that, as I mentioned right now. And the way they go about calculating your debt on a monthly basis is that they look at the minimum monthly payment requirement. So for example, if you have a student loan and the minimum required payment is $100 a month, and you're paying $200 a month just so you can pay it off faster, the mortgage company is only going to look at that $100, which is the required minimum payment for the month. Another big thing mortgage lenders look at is credit score. So you need at the very minimum a 580 in order to qualify for loans. Now, some loans have a higher credit score requirement, and also some companies choose to have a higher score requirement themselves. Okay. Give me 1 second. There's I think somebody wrote something on my screen. Okay. Okay, so I was just saying, your credit score, you need a minimum of 580 or above. Some loans are higher, and also some mortgage companies choose to have a higher requirement as well. Although you only need a 580 to qualify for loans, the higher your credit score, the lower your interest rate will be. So the better the credit score that you have, the lower your interest rate will be, which will change your monthly payments overall. Because if you have a lower interest rate, that means you're paying less per month towards interest, right? So that way your overall monthly payment is lower, given that you have a higher credit score and a lower interest rate. It also means that you can qualify for a higher priced home, because if you're paying less in interest per month, that means it leaves more room for your principal payment. It leaves more room in your monthly payment for you to get a bigger or a higher priced house. All right. Another thing they look at is the cash on hand that you have, or the cash in the bank, and that is for the initial cost. They want to make sure that you're going to be able to pay your down payment as well as your closing costs on that home. And we'll talk a little bit about down payment a little bit later. And there are ways to save on some of those costs. So essentially, what the lender looks at is your debt to income ratio, your credit score, and your cash on hand. All right. When you speak to a lender, the things that they'll want to see is they'll want to see 2 years of employment history. That's ideally. Now, there are other mortgage lenders out there that can be more flexible. And if your situation's a little different, if you're self-employed, for example, we can discuss that offline. It can still work for you, but typically in most cases, this is what they look for. They look for 2 years of employment history. They look for a steady income. Essentially, they want to make sure that this income will continue. That means that after they give you the loan, you will be able to make payments on this loan through your income. And they'll ask you for a few documents. They'll probably ask you for the last 2 years of your W-2s or your tax returns. They'll also ask you for the last 2 pay stubs. Essentially, they want to get your previous month of income. They want to see what your monthly income is like. And they'll ask for your bank statement so that they can see how much money you have for initial costs, like I said, down payment and closing costs. They'll also run your credit so that they can see your credit score and the debt that you have. From there, they will determine what you're approved for, and they will provide you with a pre-approval letter. And now that you have the pre-approval letter, you can go shopping for homes and you're ready to make offers. The pre-approval letter doesn't take long at all. The pre-approval process is very short. It can actually be done in the same day. Some people might even do it via phone, just a half-hour conversation with your lender. They're going to ask you about your income, your debt, your credit, and they can issue you a pre-approval. So a lot of times, mortgage companies don't look at your documents prior to giving you a pre-approval. They give you a pre-approval based on just the numbers that you give them. So there's a plus and a minus in doing that. Some mortgage companies will ask for all your documents and they won't issue you a pre-approval before they do that. The advantage of having all your documents in before you get the pre-approval is that, you know, the pre-approval is much more solid, and they know that this pre-approval is fairly strong and accurate. If the pre-approval is just based on a conversation with numbers, you might have told them something that is not very accurate by mistake. For example, if you have a part-time job and you're calculating that in your income, and maybe your part-time job you just got, so once they look at your document, they're not going to count that towards your income. Or maybe you're not really aware of all the debt that you have or your credit score, um, how, you know, the accuracy of your credit score, or all of that. So it is best to submit all the documents and get a solid pre-approval. This way you don't run into issues later on in the process. There's multiple times where people get a pre-approval based on conversation. They get a home under contract, and as they go through the process, the mortgage company finds out that some things don't add up right. Okay, so but nonetheless, the pre-approval process doesn't take long at all. And also, mortgage companies work slightly different, and people work slightly different. So you'll have to really kind of, you know, talk with that mortgage company, submit the documents, and see what they approve you for. So hopefully, this kind of gave you an idea of the pre-approval process and the things that the lender will ask you. Your lender will also discuss this with you. As I said, they might have different processes, so they'll tell you the specific steps that they need and the specific documents that they need. Later, we're going to talk a little bit about more financing, but more so with the lens of what goes in your monthly payment and how to save. All right. There are also ways I should mention that you can calculate your debt to income ratio yourself, and you can kind of see how much you qualify for without talking to a lender. If you would like, just, you know, post a message in the chat or a contact, or when we talk afterwards, you can tell me and I can send some of those tools to you. But essentially, you know, you can plug in some numbers, your current income, your debt, your credit score, and it will tell you how much price of a home that you can afford. But you still need to talk to a lender because those are just estimates. But it does give you a good indicator before you start looking at homes online and so forth. So how do you position yourself to buy in today's market? So as I mentioned, the homes that are good, they're not lasting long at all. So you kind of have to be quick, but you don't want to rush into anything that you're not comfortable with. It's not like you're buying a toy or a bicycle. You know, a home is a huge investment, and you know, you want to be comfortable when purchasing a home. But giving this, you know, this market, you have to act quick. So how do you position yourself that you're comfortable but also act quick? We talked about the financing end and having your finances ready, so that's very important. Another thing you want to do to best position yourself is get clear on what you're looking for. There are so many people out there that waste a lot of time looking for homes or looking at homes that they don't necessarily like. You know, they go see homes in person, and they don't really like any of these homes. It's because they never really got clear on what they're looking for. So things you want to consider are things like the location of the home, the price of the home that you want to buy, the square footage or the size of the home, how many bedrooms, how many bathrooms in the home, the style of the home, different features, maybe also schools, uh, the district that you want to be in. And some of this may come to you as you begin seeing homes in person. So I would sit down and kind of give it some thought before you even go see homes in person. But also, as you begin to see homes in person, you're going to discover things see things as they are. So maybe you'll begin to see things and decide, you know what, I really like this style, I really don't like this style. Once you walk inside of homes and you find it's too small, then you'll know, okay, well, I really need homes that are larger than X amount of square footage. So you'll know the size of home that you look at, those kind of things. So as you begin to see homes, you'll learn about really what you want and what you don't want. I think two important questions to always have in mind are what are your must-haves and what are you totally against? And this will allow you to eliminate homes before you even go see them. So if your must-haves are 4 bedrooms, right, and you definitely need 4 bedrooms, there is no reason why you should go see 3 bedrooms. If you're totally against oil heating, for example, there is no reason why you should go see oil heating. Why go see something that you know you're not going to buy or you're not going to be interested in? It's just kind of a waste of your time. Now, if you're open to it or if you are a little flexible on it, then go see it and decide. But it's important to know what are your must-haves, like what exactly you need in the home and what you don't want at all in the home. That way you can eliminate homes before go seeing them in person, and you can be much more efficient with your time as well as the home buying process and the home finding process per se. A second thing you want to know to best position yourself is really understanding your market, and I can help you with that. I can do the searching for you. So right now in most markets, and this may differ based on the location that you live in, but right now in most markets across the US, there is very low inventory, which means there are not a lot of homes for sale, okay? And that is causing multiple offers, and homes are selling for high price. So you have a lot of people that want to buy homes, but not so many homes for sale. So you have multiple people going after the same home, right? And that is, again, creating multiple offers and causing the homes to be sold at high prices. Now, don't be discouraged that the fact that homes are going at high prices. You have to look at not just how high priced the home is now, you have to look at the trend. You have to look at how the sales volume and the price has increased over the last few years, and also what the projection is going to be. For example, the town that I'm in, the price has increased on average 5% year over year over the last few years, right? So, if I buy a home at the top price now, if the trend keeps going, it will continue to increase, a few percentage year over year. So my investment is still intact, still good. Okay, so you have to understand the trend, what has been going, and what is the projection of the pricing trend, and also the sales, like how much sales is happening, how's the market going, are we selling a lot, are we selling them fast? And these are all things I can search for you so that you can get a better understanding of the market and the landscape of your market. So understanding the market and what's going on really helps you act accordingly and be much more decisive when you are making offers. So in summary, to position yourself, you want to be clear on your finances, you want to be clear on what you want, and you want to understand the market that you're in, so that it can help you in this fast moving market. It will help you act quickly. Like I said, good homes don't last long. It will help you submit attractive offers to the seller, but also an offer that is still comfortable with you financially. It will help you respond quickly, and it will help you know what you can and can't be flexible with in terms of offer terms and price. Quickly about searching for homes. The best ways to search for homes is usually when you first meet with me or your agent. I will ask for what you're looking for in a home, and I will set up a list through the MLS, which is the multiple listing service, and you will get a list of the homes that match your criteria. You can also, I can set you up with you getting homes basically as they come on the market. So any homes that come on the market that match your criteria, you will get an email instantaneously so that you can see that home really quick before most people do. Obviously, a lot of people will also search on their own through various websites and apps. So that's fine. I think the real estate industry has shifted from the agent sending homes to the consumer to people just finding homes and sending them to the agent. The way I look at it is it's really just about finding the home for you. So I'm going to send you stuff, and also you should be looking at stuff, and most people do anyway, and then communicate with me or your agent on homes that you like and want to see in person. You want to schedule homes right away. That you like, because some homes are only if they're really good, if they're well priced, if they're in moving condition, people are jumping on it right away, and homes are being sold in a day or two. So you want to make sure you're well set up, and then once you see a home that comes on the market that meets your criteria and you want to see in person, you contact me or contact your agent, and we'll set up that showing for you. All right. Any questions so far? If you have any questions, type them in the chat. We don't have a lot of time in this webinar, so if I don't get to answer them now, I'll be sure to answer them later. But I'd like to know how it's going and if you guys have any questions. So give me like a thumbs up in the chat. Tell me it's going good. Tell me it sucks. If you have any questions, let me know so that I can, best serve you. All right. I'm gonna keep on moving here just so that we can, make the best use of our time. As far as programs on how to save money, so we're going to talk a little bit about how to save money. And in order to know that, you want to know what goes into your monthly payment. In order for you to shop good loan programs, you want to know what goes in your monthly payment. A lot of people are just overwhelmed by the price of the home, and they just think that the price of the home is the only factor, but there's a lot of other factors that go into your monthly payment. So the industry uses a term or an acronym called PITI, okay? And what that basically means, P is for your principal or mortgage, I is your interest, T is your tax, and the other I is insurance. So in your monthly payment, you're paying for your principal, basically the loan amount that you took out. You're also paying for your interest. You're paying tax, and you're paying insurance, which is homeowners insurance, because there's another type of insurance we'll talk about later. You also want to look at your monthly HOA fee and something called the PMI, or a private mortgage insurance. So if you're looking to live in a community or a homeowners association and it has a HOA fee, you want to take a look at that, because that will be factored into your monthly payment. You also want to look at PMI, which is private mortgage insurance, and that's also going to make a difference in your monthly payment. So we'll talk about that, about your PMI. What is PMI? PMI is a private mortgage insurance and is usually paid if you pay under 20% down payment. So in most cases, if you pay under 20% down payment, you're required to pay what's called the PMI. Okay. Awesome. I can see some questions. I'm going to try to answer them before we get off here today. PMI is private mortgage insurance and is usually paid if you pay under 20%. So that's why there's a misconception that a lot of people think that in order to buy a home, you need to put 20% down. That's not the case. You can put as low as 3% down the price of the purchase price, the 3% of the purchase price. So your down payment can be as low as 3%. It can even be lower in some other cases, but we don't have the time to really dive into that. PMI can range between 75 to 150 bucks per month. So that makes a big difference. A rule of thumb, for about every $50 per month, that can translate to about $10,000 in the price of the home. So for example, if I'm paying $50 towards PMI, if I was to avoid the PMI, essentially I can get a house that is $10,000 higher price than the one I'm getting now, right? So avoiding the PMI can really be advantageous to you. It can save you money on a monthly basis, and also it can make you qualify for a higher priced home, since that fee is not going to be factored in your monthly payment. And there are loan programs right now that are offering no PMI, even if you pay less than 20%. So one of the ways to save is to make sure you get a home with a low P or a no PMI. Make sure to find a loan program that has no PMI. If you schedule a consultation with me, I will make sure to get you information on those types of loans. Okay, so avoiding PMI is one way to save. A few other ways to save. One is seller assist. So seller assist is money that the seller gives you at the closing table. So it is money that the seller contributes towards your closing cost. So that's basically less money that you have to bring to closing and less money that you have to pay as far as your initial cost. Another way to save is that you want to save on your homeowner's insurance. You can do that by shopping around. So shop around for homeowners insurance, get different quotes from different companies. There are also home insurance brokers. So I have a brokerage company, for example. I don't own it. I mean, I know a brokerage company that basically they shop around for you and they send you a few quotes from different companies. That way you can get the best deal. Another way you can save on homeowners insurance is reach out to your auto insurance company. Auto insurance companies, whoever it is that you get your auto insurance with, if they offer homeowners insurance, a lot of times they will have bundled packages. And you know, if they combine them both together, you can save on your insurance. Another way to save, or just to make sure that you're conscious of these things, are your HOA fees. So if there is a community that you're looking at that has a high HOA fee versus another community that has a lower HOA fee, that's one way to save per month. The tax, the way you can save on tax is kind of if you're looking in different areas, you can kind of see which areas have higher taxes than others. And by going to areas that have lower taxes, you'll be saving on that. There's also something called the tax appeal, which is basically you submit a proposal to the township to say, you know, my home is not worth as much as you guys think it is, and therefore my taxes should be lower. That's a process I can walk you through at a later point. A huge way to save is making an extra payment per year. For example, if you make 13 payments a year instead of 12 payments, that's a huge saving. For me, for example, and everyone's going to be different because the home price might be different, the interest rate might be different. But when I got my last home, I calculated on a 30-year mortgage. If I was to make 13 payments instead of 12, I would be shaving off 8 years of that that mortgage term. So basically, I would finish it, instead of 30 years, I would finish it in 22 years. And in doing so, I would have saved $50,000 because I don't have to pay interest for those remaining 8 years because I finished my loan. So making an extra payment a year can really shave years of the time of your loan and can save you tens of thousands of dollars overall because you're going to end up paying less interest. Initially, you want to get the right loan for you. There's a lot of different types of loans out there with different terms, and banks package them differently. So one thing that can come out of our consultation is me, kind of telling you what kinds of loans could be best for you, and then you will discuss that with your lender as well and see the programs that they have that could work best for you. So we're getting near the end of our time here. I wanted to keep this to about half hour, and we're kind of around that mark. What we covered was the home buying process and what you need to get pre-approved and buy a home. We talked about how to best position yourself to buy in today's market. And we talked about a few things to do in order to save you money. Obviously, like I said, everyone's situation is different. Everyone is in a different financial situation. They might have different goals. They might have different needs, wants, and so on and so forth. So it is best to talk with a real estate professional like myself, discuss your situation, discuss what you want, and I will get you kind of on the right track and will walk you step by step.